Good morning, Wall Street winners. It is Wednesday, September 18th. It's the day the markets have been waiting for in recent times in regards to the Fed rate hike decisions. So we're going to hear from Fed President Jerome Powell today at 2 p.m. And the big question is not whether we're getting a rate cut, is whether that rate cut is a quarter point or a half point. And the consensus is clearly mixed. There are positives and negatives, obviously, to both sides and both choices, but we'll have to see not just what the cut comes out as, but what the Fed, what Chairman Jerome Powell then talks about in the press conference afterwards at 2:30. That's going to be the real key, is what he says in terms of the rate cuts to follow, the potential size of those, and where he believes inflation will get to by the end of this year and into 2025. So if we look at the markets yesterday, in anticipation of these rate cuts, the markets jumped higher in the early session, and then by around noon, midday, everything started to fall off, and it ended up effectively even on the day, as you can see here on the Bloomberg app. If we turn over to the futures, just like yesterday's start, but a little more muted, all three U.S. indices are in the green in the pre-market, and we're about 30 minutes away from the open. So let's shift over to the Yahoo Finance app. And if we take a look down our list in health and retail, it's a bit of a mixed bag across the board here. Walmart had an off day yesterday, so looking for that to potentially come back a little bit. If I were to see Walmart in the, as I said a few days ago, in the $73 to $75 range, I think that would be a bit of a steal. We have had some news out from General Mills this morning in terms of earnings, and it is off about 3% in the pre-market. We also have some others that have reported. Won't get into those because we really don't follow them. We are waiting on FedEx numbers later in the week, so that'll be an interesting one after U.S. retail sales yesterday came in stronger than expected. We can see the transport sector, which we're really not that interested in right now. More risk, I think, than benefit in that sector. Crude had a good day yesterday. So if we look at crude crossed the $70 mark. It was actually, I think, touching 71. It's now down 37 cents. It was down a fair bit more earlier this morning, but it has bounced back. I think it's going to come up above 71 again today. Not sure what it's going to do once the rate decision comes out. It could drop or it could spike further. But lower crude prices are typically better for everyone across the board except owners of those oil refining companies. They tend to take a bit of a hit on that, but their costs come down, cost to operations with interest rates coming down. With crude coming down, manufacturing becomes a little more inexpensive, travel costs become less expensive. So there is consumer benefit, there's business benefit, and when there's a business savings, it typically can roll into a consumer savings, and that in turn then can roll into an inflation savings, which puts more money in the pockets of consumers. So overall, having relatively fair or lower crude prices isn't a bad thing for the economy. But when crude prices are high, it doesn't mean that goods jump in conjunction with that rate, the price of crude as well. So I think we could see a positive day again for crude. I think we're going to see crude make a comeback. I think we're going to find it settle in the $75 to $78 range by the end of the year is what I'm anticipating. And based on that, I think there's still some upward movement in these oil refining stocks, most of them very solid cash generating, dividend paying businesses that have a fair bit of runway to get back up to their highs that they've achieved already this year and come off of. If we go down to tech, the darling sector really, you can see that it's a mixed bag as well, but more green than red on the screen. And we've got the earnings from Micron coming out in 7 days. So a week today, next Wednesday, we'll get Micron earnings after the bell. I think it's a steal at that price of $88, $89 right now. Apple's taken a bit of a hit. There's talk that that new iPhone 16, the hardware really isn't that significantly different to accommodate the AI changes that they're talking about in their software side. So we'll have to wait and see on that. They've also got some new AirPods coming out, and those generate a ton of revenue on their own, and they're growing their services revenue. And the services revenue is really where they have a ton of margin. And if they can continue to do that, and obviously they're a company with a lot of cash on the sidelines to be able to make acquisitions or investments or share buybacks or increase dividends. So there's a lot of potential, certainly a very strong balance sheet. CRM looks like it's making some moves today and coming back. We have Cloudflare, which is looking like it could get back up to the $80 period today, or the $80 mark. Microsoft is continuing to move forward. They made some big announcements this week with that $60 billion share buyback and an increase of 10% to their dividend payout. So that is boding well, making it even more of a blue chip stock than it was before, with that dividend increase and that guaranteed income through the dividend. ARM is on its way up. I really have to question the growth of ARM based on the price earnings multiple. I mean, I know that it's heavily involved in semis and semiconductor design and everything to do with AI, but at 333 times future earnings, it does seem a little bit on the rich side. On the other hand, is a semiconductor company, makes a lot of chips for the EV and the commercial car sector, not just EVs. And if we do see drop in rates, that typically will mean that we should see an uptick in housing sales and car sales. So big ticket items, the number of those items sold tends to increase as interest rates go down. And when there's a need for a refresh cycle on an automobile per se, not necessarily a house. Houses usually are phased with your lifestyle and your life stage, where when you're living on your own and single or just married, you don't need as much space. But as you maybe start a family, you might need more space, and that leads to a transition either from renting to buying or from selling your existing smaller place and buying a larger place. So we'll see what happens with ON. I think that ON is at a deep discount there in the low 70s, and am a fan of that company. If we scroll down further and take a look at some of our others, Lam Research is making a comeback. I think this stock is a steal in the 700s at 766. It was down at 754. This is a deal right now. This is going to be a $1,200 stock by March or April of next year. So that's a huge uplift, probably 40 to 50% gain, if not more, on that stock in a 6-month period based on where we're going with semiconductors. Oracle's made some great announcements. They really know how to manage the market with their investor communications. Have to give them credit where it's due. That company has made some great announcements post-earnings. After having a good earnings report, they then announced again an increase to their future guidance 3 or 4 days or maybe 5 days after their earnings report, and that boosted the stock. So that continues to climb upwards. I think we're starting to get to an upward ceiling on Oracle. So although it would have been a good buy pre-earnings, I'm not sure that that's something that I would be buying into right now. Amazon making some back to office or RTO, return to office announcements that are questionable in some people's minds, but justified in others. Their stock is getting near its high for the year, up around the looks like it's going to be around 189, maybe get up to the 190s today. Tesla, this is one that I have a question mark about. I mean, I'm somebody who has a Cybertruck order in, and it's been a total gong show for me on the Cybertruck side. I've owned a couple of Teslas, still own a Model X right now. And although they're a great car, when they do have problems, they are very expensive to fix. And I think they're still in the early days. But if they can roll out that automated driving, and my self-driving is a gong show in my car. It always kicks off in the beta mode, never lets me finish a ride. But if they do get those things ironed out, I think it could be a way for that stock to accelerate. I am still a huge lover of Meta. I think that this stock, as it has, I mean, it's gone from the 470s recently, now up to the 536s. Looks like it's going to maybe hit 540 today. 2 weeks ago, when it was down in the 490s, low 500s. I was telling you that this stock is going to go to 550 by October, and it looks like it's definitely on track to do that. BABA's making a comeback. We really have to wait and see what's coming out of China. We get mixed reports there, but if the Chinese consumer market picks up, this stock is bound to make a recovery. Now, it's been a long time coming, so if you've owned BABA for 3 years, you're probably underwater in BABA because it was trading in the 225 and then 125 and then $70 range, but it's at a deep discount at this point. If you take a look at BABA in terms of price to earnings, it's only 21 times earnings. Now, it's still a high multiple, but if you scroll up and look at Con Ed in the utilities sector, which is a stable kind of stock that has a dividend, it's at 20.3, and it doesn't have anywhere near the growth possibility that BABA does. Now, it does pay a much bigger dividend at 3.18%, but if we scroll back down and take a look at BABA, and it does have a dividend, but its dividend is 2.36. So again, not bad, and certainly something that when China finally gets back on track, it will recover nicely. Still love NVIDIA, and at 115, I think you're still going to be making money if you buy that and hold it to the end of the year. And then Google. If you took my advice the other day and bought Google, you're up over a couple of percent now and in the money, and it looks like it's going up again. So my feedback, as it was yesterday, don't sell yet. Continue to ride this. It's on a bit of a recovery. It's making some moves upward. It didn't recover as much as others did after that tech fallout about 4 or 5 weeks ago on Monday. With the yen sell-off and the carry trades, but this stock is going to come back and be a $190 stock. So hold on to that. You're going to do well in percentage terms. Adobe got pummeled again yesterday. I do believe Adobe is a good bet in the long term. They really mismanaged their communications on their earnings release. That was really sad to see. They were far too conservative. They are lacking in AI direction, which was sad as well. That's something that management, the executive team, really needs to get a handle on quickly and change their messaging. If they do that, like Salesforce has, another company that kind of missed the mark on their AI strategy, I think they're going to come back and be a $700 stock by March or April of next year. SoFi took a bit of a dip yesterday. At different times, but it finished up 6 cents. It was up higher than that during the day. I do believe SoFi is a great company to buy. I would wait for a bit of a pullback into the $7 range at this point and might take some profit by selling that at this point. Based on where it is. JP Morgan coming back. It was up in the mid 220s. It dropped when all of the other banks' financial stocks dropped a week or so ago. It's now making a comeback. So we'll see that that's going to take place. And, sorry, I'm bumping around here. If we go back to our finance and back up, we can see TD's making a move upwards. We can see that Goldman took a bit of a hit pre-market. I don't think this is going to stay. I think Goldman's going to get back up into the 515 range. Certainly around earnings, I expect this stock could get up as high as 550 after a good earnings print because we are seeing increased M&A and investment banking activity. Morgan Stanley under 100, I think, is a buy right now. This stock should easily get to 104 to 106. At earnings, and earnings are coming up soon. So although we still haven't finished the earnings cycle for the second quarter, the earnings cycle for the third quarter is starting, and we'll see earnings from these guys out on October the 16th. If we look at Goldman, we'll see earnings from Goldman on the 15th. And if we look at JP Morgan, we see earnings as one of the first on the 11th of did I say August? I meant October. If I said August, my apologies. We'll see it in October. So I'm liking financials. I think with the rate cut today, there's a lot of potential for financials to make an upward move. So today, if I were to pick a stock that I would buy today to make money on, I would put money in Morgan Stanley today. That would be my pick of the day for a financial stock that I think will do very well come 3 p.m. today when we've had the Fed announcement, maybe even 2:05 p.m. when we've had the interest rate reduction or rate decrease announcement, I think we'll see an uptick in Morgan Stanley. Good luck with your trades today. If you're liking these videos, please leave me a like and a comment and consider subscribing to the channel. I put these out every day and try to provide my feedback, which is over 30 years of investing experience in the markets, in trading individual stocks, myself, and managing my portfolio and my family's money. So I hope these are helping you. I don't have anything invested in this from my perspective. I don't charge people for this. I don't do consulting. I'm just here to share my knowledge. So I hope it's beneficial.